Welcome back. Now that you've had the introduction to budgets, we're going to look more closely at how you prepare budgets, and we're going to start with the cash budget. Now, a cash budget will record the anticipated receipts and payments of cash. Remember, a budget is looking to the future, which is why it's anticipated. Now, the important thing with the budget is that you will record in the month of receipt of the cash or in the month of payment of the cash. So it's not when the actual transaction took place. So you're not recording, for example, when a sale took place or when a purchase took place. You are recording when you receive the money from the sale and when you make the payment for the purchase. Now you can see on this layout here, we have a cash budget format. Across the top, we have the months. Cash budgets are normally prepared on a month-by-month basis. So you would normally put the month names in there. We start off our cash budget with the opening balance. So how much money do we currently have? Then we have a receipts section where we list the receipts of cash. So here we've got receipts from debtors. We've got sale of fixed assets, receipts of loans and cash sales. Now what you put in there will depend upon the question that you're looking at. So you may only have a receipt from debtors, you may only have cash sales. So it's wherever the money is coming from is what you will detail in that receipts section. And then you total your receipts. Then we have the payment section, and again you list where your money is going. So we've got payment to our creditors, we've got payment of wages and salaries, loan repayments, purchase of assets, dividends, taxation, cash payments, and any other payments that you may be making. Again, no need to list all of these, only list the ones that are relevant to the question that you are completing. We then total these and we have a total payment. And the final step is the closing balance. Now the closing balance, i.e. how much money you will have left at the end of the month, is the opening balance plus your total receipts minus your total payments, and that will equal your closing balance. So just a reminder, opening balance plus total receipts minus total payments will equal the closing balance. Now your closing balance at the end of one month is also what you're going to be starting the next month with. So your closing balance at the end of month one, you will carry forward as your opening balance at the start of month two. And then you will continue and put in your receipts and payments again. So that's your basic layout. It will make more sense if we look at an actual example. So we have example 6.1. A company manufactures and sells one product. Sales are £30,000 for December, £40,000 for January, £50,000 for February and £60,000 for March. Debtors normally settle 50% in the month of sale and 50% in the month following. So if we just consider this first paragraph, we've been told when the sales are made. Now for the cash budget, you're not interested in recording the date the sales are made. You are interested in recording the date the funds are received. So we're told that debtors will normally settle 50% in the month of sale and 50% in the month following. So we need to work out the total amount that we will receive each month from our debtors to go into the cash budget. So we'll look at how we do that in just a moment. So let's move on to the second paragraph. This tells us that the opening cash balance for January is £10,000. Purchases of £25,000 are made each month and are paid in the month of purchase. So that's the important bit. When is the purchases paid? They're paid in the month we make the purchase. Expenses of £5,000 are incurred each month and are again settled in the month of purchase. So we're required to prepare a cash budget for January to March based on this information. So the first thing we need to do is work out when we're going to receive the money from our debtors. And the best way to do this is to draw up a table. Now I suggest that for every question you take this approach. So if I just show you a table that I already have drawn up. So I have listed down the left hand side the month in which the sales are made. So the month December, sales £30,000, January 40, February 50 and March 60. Then I have these four columns here where I'm going to work out exactly when we receive the money from those sales. So starting with December, the December sales, 50% is received in the month of sale. So that means that 15,000 will be received in December and the other 50% 1 month later. So it'll come in January. Now we look at January. 50% of January will be received in the month of sale. So we'll receive it in January. And the other 50% in February. Do the same with February sales, £50,000, so 25,000 coming in February and 25,000 coming in March. Then finally our March sales of £60,000, half of that, so 30,000 will come in March, the other 30,000 in April. Now we don't need to worry about that because we're only looking at the cash budget up till March. So now total it up. So total amount of money received in December, £15,000. In January, 35,000. In February, 45,000. And finally in March, 55,000. So we have the figures to put into our cash budget. So let's have a look at the cash budget. So we have here our basic layout. So across the top I can replace the month 1 with the name of the month. So we've got January, February, March. So what do we know? Well, the opening balance, we were told that the opening cash balance for January, £10,000. So we can put that into the budget. The receipts. I've now worked out the receipts from our debtors. So if I put from debtors, let's just have a look back at the figures. We have January at 35,000, 45,000 for February and 55,000 for March. The December figure we don't need because we're doing the budget for January to March. So if I just write those in. Now let's go back to the question and see what else we can put into the cash budget. So we've dealt with the receipts. We've put the cash balance in. We're told purchases 25,000 made each month and paid in the month of purchase. So we're going to be paying £25,000 each month for our purchases. So back to our cash budget, in the payment section, purchases, 25,000 in January, in February and in March. So what else have we got? Expenses of £5,000 are incurred each month and again settled in the month of purchase. So we're going to be paying £5,000 each month. So expenses, 5,000 each month. So that should be everything. So let's just double check. We've put the purchases in, we've put the expenses in. So we can now total up and finish our cash budget. So total receipts, there is only the one receipt, so that's 35,000, 45,000 and 55,000. Total payments, 25,000 plus another 5, 30,000. The same for February and the same for March. So now we need the closing balance. So the opening balance in January, £10,000. Add the receipts, take off the payments, and that gives us £15,000. So it's the opening balance plus receipts minus payments equals closing bell. Now if we've got 15,000 at the end of January, we must still have 15,000 at the beginning of February. So that becomes the opening balance for February. Add on the February receipts, gives us 60,000. Take off February payments, gives us 30,000. So we have £30,000 left at the end of February, means we must have £30,000 to start March. So that's our opening balance for March. Again, add on our receipts of 55,000, so that will give us 85. Take off our payments of 30,000, will leave us with £55,000. So that's our closing balance at the end of March. Now sometimes you will also be asked to complete a total column. So if I put a total column in, now be careful with your total column, because we're totaling the 3 months. The opening balance should be the balance at the start of the 3-month period. So £10,000. So don't make the mistake of adding the 3 opening balances together and putting them in. What we want is the opening balance at the start of the cash budget. When it comes to the receipts, we can total the receipts. So January receipts plus February receipts plus March receipts comes to 135,000. So total of 135,000. Payments, total our purchases. In 3 months we make £75,000 of purchases and 15,000 in expenses. So that's a total of £90,000. So to get this closing balance figure, exactly as we've done before, opening balance of 10,000 plus our receipts of 135,000 minus our payments of 90,000, that gives us £55,000, which is what we've already worked out to be our closing balance for March. So there is our basic cash budget. Now, every budget that you do, I would strongly suggest you approach it the same way. So work out your receipts from your debtors or from your customers by drawing up a table like I have done here and working out how much you are going to receive each month. Remember that if you have cash sales, then you receive the money from those sales at the time that the sale is made. So if you make a cash sale of £10,000 in January, your receipt would be in January. That's the definition of the cash sale. The receipt is made at the time of the transaction. So look out for that. Make sure you put your cash sales in the month the sale was made. For your credit sales, work out when you receive the money, so which month you're actually going to receive those funds. Sometimes purchases are paid for in a similar fashion. In that case, draw up another table for your purchases and work out exactly when you will make the payment for the purchase. Many questions will give you a figure for depreciation. Now, remember, depreciation is an adjustment. You don't actually pay depreciation. You don't get an invoice asking you for £5,000 worth of depreciation to be paid in 30 days' time. It is an adjustment only, a non-cash expense, and therefore depreciation should not appear in your cash budget. So if you're told expenses of £20,000 include £5,000 of depreciation, the actual expense figure that you would put into your cash budget would be excluding your depreciation. So if it was £20,000 including £5,000 of depreciation, the figure that you are actually going to pay is £15,000. You are not going to pay that depreciation, so do not put it into your cash budget. Another tip I would give you when drawing up cash budgets: draw your layout, then put into the cash budget any figures that require no calculation. So for example, on this one we've just done, we were told that the purchases were £25,000 paid in the month of purchase, so they were very easy to write straight in. The same with the expenses, £5,000 a month paid in the month of purchase. So again, very easy to write those in. So get the easy ones into your cash budget first. Tick them off so that you know you've recorded them, and then start thinking about the more complicated ones and the ones that require some calculation. Once all your figures are in, then total. So get a total for your receipts and a total for your payments on a month-by-month basis. Then finish off by doing your opening and closing balances. So they will obviously be a bit harder than this example we've looked at, but the method for all of your cash budgets is the same. So what I suggest you do now is have a look at question 6.1 and see if you can do this one. Exactly the same approach as I've just used in the example. So draw up a table to work out when you're going to receive the funds from your customers. Draw up your cash budget format, insert all the figures, look out for depreciation, and then get a closing balance for each month. So this particular question requires you to do the cash budget for June, July and August. So give that one a go, and then when we next meet we'll have a look at how you've got on with that one and then look at some more complicated examples. Okay, so we'll see you soon, and thanks for listening.